Thursday, September 26th. Market analysis, Stan Ehrlich, good morning. 9:50 California time, right in the middle of the trading day. I start out with stock market indexes, go to futures, and oftentimes go to cycles. I will tomorrow, Friday, detail, because October is starting on Tuesday of next week. I'll detail this October low history so that you can see how often and how profound the month of October has been for over 30 years. So I'm expecting that we're going to have some sort of a low in October. So where does the market start to go down? For me and the ERSignals technique, I need to have overbought conditions. This morning, because the stock indexes gapped up, we got overbought for the first time in several weeks across the board within the last few days, overbought, and mostly today because of the gap up in every one of the indexes. So they're all primed. The SPY, NES, the QQQ and NQ, the DIA, but I'm not showing that, the YM futures and the Russell futures all have been overbought today or within the last few days. So if we have a bearish engulfing today, we'll get sell signals. We've already gapped up and come back down in some cases to unchanged and are now modestly higher on the day. It would be so easy to have a little bit larger break and get below yesterday's low, creating a large group if all of them do that, and not necessarily all of them will. For instance, the NQ, I believe, has been very strong and is hanging. Oh no, it's a YM, the Dow futures, staying up there. You'll see that in a minute. So now I'm turning yellow for overbought on the E-mini, like a week ago, which did not have a bearish engulfing. And the market has moved into new high ground, in particular today, but it's not holding it very well. Only up a little over a point, basically S&P, which the equivalent number would be like a 1.1, 1.2. Just move the decimal point to the left if you're talking about SPY, to the right if you're talking about the E-mini. Obviously, 1/10. Okay, so new lows would get closer and closer to having red, bearish engulfings, and it could turn out to be the turning point. Like I've been talking about, yes, I know for the last couple of weeks, essentially a little bit before, I would say early September, expectations of it continuing to work lower. But we did get buy signals on September 11th. Regardless of my opinion, the code does what it's told to do. There is the major difference between discretionary trading, because you change your mind all the time. You don't have the disciplines. You don't keep doing the same thing exactly. But if you can code your good ideas, and they do over a substantial amount of time continue to be profitable, good ideas, then you've got yourself a trading system. But discretionary trading means you're all over the damn street. Emotions, greed, fear, procrastination, a variety of other factors, human being factors, not good. So all I have to do is to get a red sell signals, get below yesterday's low. Now the details. We're looking at a new low a few minutes ago for the day, but it bounced back and now it's slipping again. We're right smack dab at a little bit of support, and I mean a little bit, nothing major. I do think there's a very strong likelihood, and I've just set up this alarm line so it'll go off maybe while we're still doing the YouTube here and tell me that it's making a new low for the session since the high was made. Now, if we make a new low for the whole session, then we're getting very close, much closer to making a low lower than yesterday's low. And I also have an alarm line there that would be, of course, a tick under yesterday's low. But I just want to know if it keeps making new lows, and that will go off, and this is the E-mini. Now, the spider is pretty much the same thing, except it didn't get overbought today. I think this is the only index it didn't, along with the Russell. But it was overbought within the allotted number of past days, and therefore bearish engulfing today will turn red. And I certainly hope that's going to happen. And I hope that that is signaling the beginning of the decline into the month of October for the long-awaited seasonal lows, October. Now, fine-tune, right smack at lows earlier this morning, right in here. Looks like it's about to make new lows. The key here is getting below this low, 568, 80-ish, yesterday's low. Next chart is the daily QQQ. Overbought at resistance and the top of the resistance area at that. And please notice that this resistance was based on a gap closure. And that gap was between July 16 and 17. That's quite an old gap, but gaps are almost always closed, and this one is finally closed. Usually within a few days, maybe a week or two, they're closed. Not necessarily 2 or 3 months later, but this is closed now. So prime situation. All I have to do is get below yesterday's low, and I've got a red bearish engulfing sell signal, hopefully as good as this one or better. Next, details, open on the high, gapping up, came all the way down to close the gap. Then it rallied, and it is failing so far, but I need to get below 484.50-ish, yesterday's lows, to have that red bearish engulfing. Next chart, overbought again on the NASDAQ futures today. First time overbought since the lows, and a buy signal that has worked very, very well. So looking for a turn. And I have been ever since the damn thing started to rally 2 or 3 weeks ago. So I'm stubborn, I suppose, so one could say, but I've got my reasons, and I don't make a trade until I get the signals. Opinion is different than a strategy. And this last big rally, much different. I was basically bearish all the way up, looking for reasons to go short, and couldn't justify it completely. No signals. Detail on the NASDAQ continuation December at the moment contract. Looking like it could make new lows, but it's not as close to the lows as we saw on the E-mini, for example. Next chart. This is not in the YM what we have seen before. The YM actually did have a major bearish engulfing sell signal yesterday. And these are all of the trades since then. Let me see if I can clean this up a little bit. Excuse me. I'm going to get rid of this. Okay, do it that way. Select. I'm going to get rid of these white, what they call labels. And here we go. Just leave the little pointer markers. Much better. So ER3 is short, scalp, and overnight. ER1 overnight is short with a little bit of a loss. And ER1 scalp made a lot of money yesterday, and here it is. As you're coming down below the previous day's low, ER1 got short. It's the green trade line. It got out on the close. The stop for that trade never got hit. So out on the close for a scalp, made good money. The overnight version is a loss at the moment. And not too bad, but, a loss. Not losing all of what we made yesterday on the scalp. And it's still an open trade. So if I'm right, everything's going to start to slide here quite a bit. And I mean quite a bit. Now, I'm noticing the ER3 entries, the scalp version with a faster moving stop did unfortunately get hit right smack on a rally high, unfortunately, and we have a day trade loss. But the two red trade lines for 1 overnight and 3 overnight both have a little bit of a loss, but we're sinking. So all you have to do is get down below 424.30 and both will be turning green. Because interestingly enough, just coincidence, we're short 1 overnight and 3's scalping overnight at about the same price, which is very unusual. So let's get it down next. Russell, higher high, could have a lower low, was overbought within the allotted past number of days. Therefore, this could turn red if it does get below yesterday's low. And again, I think it could. We got the very bottom of the market right here. We got an excellent buy signal, not at the lowest low right there. This one did not work. So let's see if we get a bearish engulfing. If it doesn't happen while we're still talking, then you'll see it tomorrow or not. Okay, Russell, detail, not much here. Bonds are doing exactly what I expected. We topped out. We're starting to work our way lower. It's actually following the line I drew 2 days ago. I don't think that's going to happen until we get into October. But I expect it to bottom out somewhere in this green circle, which is October, and somewhere between the high and low of the circle, the price range. Probably should move this up just a little bit, but that's about it. I want to keep it above that line, which is the old neckline. I say old because this and notes, bonds and notes, are potentially building double shoulder, head and shoulder bottoms for a 2-year pattern. October 22, bottom. We have a low, March 23, 5 months or so later. Then we've got the bottom, and yes, we did get a buy signal at the very bottom of the market. That's why I built the ERSignal trading system. It picks very often major turning points, past tense. But you got to believe it when you see it and do it. Otherwise, you're not in it. Now, approximately this date, June-ish, but it was actually a low in April 25th on, is the first shoulder low, but it's a little sloppy, but nevertheless there. I think the second and last shoulder low is coming up next month. Starting Tuesday of next week, we got October. But obviously in 2 or 3 days, and we're not going to drop that much. I don't think so. Now, if that happens and it starts to go back up again, I have a brand new trend line. It's this one right here, and it is a neckline, not a trend line. And let's just make the line very heavy duty, no opacity, and 100%. And let's make it also, yeah, dashed is good. Bingo. Now I believe at this point that this could be the new neckline on the double shoulder, head and shoulder bottom. This is the neckline on the single shoulder, eliminating this as a shoulder and only counting that. But now with the low coming up in October, I hope, expect, and forecasting, you're going to have a double shoulder, head and shoulder bottom, 2 separate necklines. Very, very, I don't remember the last time, and I've been doing this a little over half a century. 71 is when I started drawing my charts as a runner on the floor of the Mercantile and Board of Trade. And in my early 20s, well, maybe mid 20s, but okay, fantastic. Very rare. Therefore, I got to watch carefully if anything goes wrong. Combination of formations. Now, we are getting oversold today for the first time on the way down here. That implies that either immediately or soon, around here or a little lower, we're going to have a rally. It doesn't tell me, unless I get a gigantic buy signal or something, or other reasons to believe we're going back up again, that we're going to bottom out. We're just going to have a bounce, because I get buy signals on the way down often enough. They do provide plenty of profit potential, usually. But that's all I can get out of this. But I frankly think it's going to go lower first before it bounces. 10-year notes. We are short ER1 overnight, still new lows, doing extremely well. ER3, new short the next day, overnight, at a little higher price. One of the reasons I developed ER3, they usually get into the trades at more advantageous price levels. So the risks are either the same or even lower, and the profit higher. But we miss maybe half of the ER3 signals for the entry price. Doesn't come back to our entry price. Anyway, this one did. Sold the rally on September 18th and never closed with a loss. Frankly, it looks like the ER1 overnight never closed with a loss either. Apparently not. No, it didn't. Okay, so these two trades are working great in interest rates. Again, looking for a low in October in this approximate range. Now, I know that looks like it's a way, way down price level, but take consideration that we just moved from July 23 at 111 up to about 115, let's call it 4 points. And if I'm at 14 now and a half, and all I'm looking for is 10 and a half, that's 4 points. And I'm giving it more time, no less, excuse me, than this rally took place. This took place only a couple of weeks. So there's enough time, and that's not really that big a crash. It's not. Next chart. Crude. Big down day, staying relatively close to its lows. Basically a bear trend. And the bigger picture here is this large pennant formation. We broke out to the downside on September 4th. The rally was a little bit more than I expected. Usually it'll stop around this trend line, the bottom of the pennant. It didn't. It came back up into the pennant for about 4 days or so, but it blew below it yesterday, the line, on another, so to speak, downside breakout. And today there's a lot of big downside follow through. Didn't get overbought. It was just simply the pattern and resistance that caused it to turn down, as far as I can tell. And now we're looking at high grade natural gas. 4 days in a row, including today. We topped out almost at exactly the same price, so that right at the resistance level. I have had this resistance level in there for months. And it reached my minimum upside objective on, wait a minute. That's not right. Okay, comment, sorry, wrong. Has not yet reached the minimum upside objective on this contract. It needs to go up to 3.108-ish. But because it's at the resistance level, that still stands. That's good. And we're overbought. We're getting a little correction. I think it'll stop going down fairly quickly soon, maybe around 2.6, and then go up to my minimum objective, 3.106 or so. So I am friendly, but a little bit bearish momentarily because of the overbought and resistance. Next, heating oil didn't get overbought, didn't even come close. Big down day today, broke the lows of the last 5 days or so. Maybe beginning to trend down to make a new low again. No signals, no resistance per se, no particular reason, just a bear trend turning down. Bearish, looking for new lows. Gold is a perfect setup for a new short sale signal. All it has to do is get below yesterday's lows. And I think I'm going to say the same thing in silver and platinum also. We'll find out in a moment. So I would consider putting a sell stop a tick below yesterday's low to get short. and don't risk too much. My maximum risk is a tick above today's high, and I do lower my stops super fast, depending upon whether it's an overnight trade or a scalp. But again, I'm watching very carefully for a bearish engulfing red signal here. The last one was an okay one, went down for about a week, profit potential, but it didn't turn the trend. This one at 87, 88 ballpark RSI could turn the trend down for weeks. Turning bearish on gold, but waiting for the signal. Silver, same thing. Overbought the last couple of days. Maybe we'll have a bearish engulfing today. And I'm going to completely eliminate this head and shoulder top reference now that it is rallied as much as it has, which really is way too much. And I'll eliminate that one and that shoulder high. After all, it did work about half of the downside objective, but it was supposed to go down a lot lower. Now I'm back to simply a very broad trading range and a large resistance area that I should draw in real quick here. Across these tops and across that high. And yep, we're in the resistance zone right now and overbought. And it's pulled down out of that resistance at the same time. So I'm liking what I'm seeing about a good setup for a new sell signal. Let's take a look at platinum in just a moment. All right. Had to close my cell door. So a setup. On your toes for a sell signal in silver. Platinum. Not quite overbought. In resistance. So I don't have all my favorite features happening. But I'm keeping a close eye. Right now, resistance is the major feature. So I got to see it fail, and it's not doing that much pullback yet. I don't know. Watching very carefully here. And I'm also going to eliminate the downside objective measurement line, the neckline, the shoulder, head, and shoulder. And I'm simply left with the sell signal on top. This is a little support and resistance level. Bottomed out at support just a couple of days ago. Let's raise this up. Now, you know the small head and shoulder top, and I have to make some adjustments on some of these lines here because we have shifted contract months to now the January of 25 platinum contract for this continuation chart. So that formation, albeit fairly small, only about a month in duration, worked very nicely. I'll leave the markers in place. Copper. Finally today got to my forecasted long ago, weeks ago, upside objective. Copper is now done high and last at my objective, which I started talking about probably around September 5, 6, 7, 8, somewhere in there, when it started to turn back up again after the buy signal on the second low of a double bottom. And we got a buy signal on the first low, almost the low, very close, on the first low of the double bottom. So both lows. In particular, this one's the lowest low, just before the big move here. Great. I mean, if I was going to choose one to have a buy signal on, it would obviously be the one just before the big move up, which we got. Next. And so now, wait a minute. I'm overbought at an upside objective, and I'm having to tell you 91 RSI is very, very high. In fact, how long has it been since we've seen a 91 or a 90? Oh my God, I don't even see it here for the last 2 years, maybe. This is, I gotta say it, very close in time and price to turning down. I don't think we're going to go up much more. It could be a matter of minutes or hours, and a matter of a day or less. This is primed. High grade copper. Now, beans. Also overbought. No particular resistance area. Starting to look a little bit more friendly. I'm not going to be surprised if we get 1104 out of this rally. I've been talking about that for a while. Got a buy signal close to the bottom. That sell signal didn't pan out that well, but it did go down for a few days. And up we go. I'm friendly, but I'm not long-term bullish yet. I think what we need is to finish this rally wherever it's going to be finished, and I think it has a chance of 1104, right around there, give or take a nickel or something. Then a big downside move taking probably a couple, 3-4 weeks, maybe even a little longer. And if that does not make a new low for the trend and bottom out and start to work our way back up, that will cause me to become a lot more interested in talking about longer-term bull market in grain in general, and this is soybeans. Next, oil. At resistance, overbought, and could, and it's close, very close, to having a bearish engulfing ER red sell signal. We got one on the top of the market back here to the exact day. We got one on this rally high, which ends up being the first of a sort of double top in soybean oil. Both of the highs essentially have my signals. We might have one by the end of the day today in soybean oil. Meal. Less likely, but possible. And it's getting stuck around this trend line. Even though it got up above it, it doesn't seem to want to stay there. We're hovering right on the line, pretty much on the current tick. Again, possible new sell signal. Next, I'm noticing the E-mini, by the way, is now only 6.5 higher and sliding. The spider is only 60 cents higher and making new lows. Just might come true here about my bearish engulfing in the stock market and indexes. Let's finish. Corn. Again, I'm starting to talk about longer-term bullish potentials in grains, but not yet. And it's going to take another few weeks, maybe a little longer, maybe not, but a while before I can start talking intelligently about a long-term bull move in grain. It's just not here yet. This still looks like a rally, and it could go up a little bit more in a bear trend. Wheat. Almost a new high. We bought the bottom. Perfect. Great. The low. By the way, we also got the top at the beginning of the war 2.5 years ago. We had a red sell signal, one of the most spectacular signals I have seen in my career. And you know, I've seen some whoppers. This has got to go down as one of the top 1% signals. Who in their right mind would go short when the market is screaming limit up bid, lock limit up, opening limit up on some days, and making records straight up? And you're going to tell me you're going to sell short? Well, it worked. I got a signal. It's not my opinion until after that signal occurred, of course. So basically still neutral to bearish in grain, but I am starting to throw little bullish commentaries in here. Now we're going to go to cattle. We currently have an outside up day. It is overbought, but if this closes lower, below yesterday's close, it will turn back to red, because I saw it being red earlier, but there was a rally and it got higher on the day, killing the red color, putting it back to just plain overbought. But again, all I need is for it to close one ticker more lower than yesterday's close, and we will have a sell signal in resistance where it is and we're overbought. So the final straw here would be red. Next, Miss Piggy nosediving a bit today. Minor double top. I'll draw in the downside objective in a couple of days, maybe for tomorrow. Not that close yet, but it will be down into this yellow zone. Why don't I do it right now? Easy enough. Average of the two highs immediately above the lowest low. That's good enough. And therefore, this is the depth of the formation. And you take that stick and you drop it below the lowest low, and you actually get a little bit below that support area. I thought it would be in there, but it's a little bit below. So that's my minimum downside objective for a double top if the double top works. And we haven't even broken out yet. So you need to start closing below 70.40, 70.40 in order to break out. And that's a close. Next, overbought on the E-mini, dropping much closer to the lows. Look at this. Made a new low, coming close to one of my alarm lines, but not quite yet. I'll raise it up just a hair for a minor new low. I think it's going to happen. We could see a lot of red signals tomorrow when you're watching the YouTube, I hope. You guys have a great day. I know this is a long one because we've got a lot of setups here. Profitable trading to you.